Well, good morning, everybody. My name is Estelle Parker. I'm an Executive Manager at Responsible Investment Association Australasia, and I'm coming to you today from Wurundjeri country here in Melbourne, where we're currently in Guru season, which is grass flowering season. This is the time of the year when the weather is very warm, but it still rains. Obviously, as we can see today, the kangaroo grass is flowering, as is the Victorian Christmas bush. And the Orion constellation is setting in the western sky around sunrise. We've actually been through, since we started running these TNFD webinars, all 7 seasons of the Wurundjeri calendar. I'd like to pay my respects and acknowledge those who have looked after these lands and waters for countless seasons, and to all First Nations elders past and present. Kia ora also to those who are joining us from Aotearoa, New Zealand today. Well, as convener of the official TNFD consultation group, it's such a great pleasure to have worked with the Kew Department of Climate Change, Energy, the Environment and Water on this series of webinars. And it's great to see as well the Australian government's continued commitment to TNFD, including through the release of its Sustainable Finance Strategy consultation paper recently. So the agenda for today, we're going to do a deep dive into the TNFD metrics and some of the tools that you can use to report against those metrics. We'll also do a panel discussion delving into nature-related metrics and tools. We'll understand how to incorporate Indigenous knowledge into measurement, which is really important. And we'll also do a great deep dive into the case of Cairns Airport, both its First Nations engagement and also its environmental accounting. We'll also hear about some sector-specific piloting that was undertaken. And finally, we'll hear from a senior Australian government official about forward plans. So this webinar is due to go for just over 2 hours. Please feel free to put your questions in the chat at any time. We'll do our very best to answer them. And who better to conduct an overview of TNFD metrics than Guy Williams, who is a former TNFD task force member. He actually co-led the metrics working group of the TNFD globally. And full disclosure, he's also one of the co-chairs of Greenest Nature Working Group. So welcome, Guy.
Thanks, Estelle. Good morning, everybody. I'm just going to bring up some slides to guide our conversation today. And I think that does the job quite nicely. Fantastic. So wonderful to be here. Thank you so much, Estelle. Although my lovely title screen has the big Pollination logo, who I'm an executive director for today, I'm talking on behalf of the TNFD. Over the last 2 years, the work of the TNFD has focused really heavily on how do we value and measure nature as a core part of the TNFD framework. And in September, with the final release of the TNFD recommendations, we were able to see some really kind of clear guidance for businesses to start to engage on this, one of these key challenging topics of the TNFD endeavour. I think, but obviously before I start as well, I also want to pay my respect to traditional elders, traditional knowledge in which we draw from when we're doing a lot of this work. For me here today, this is kin country here in Chile, Hanoi. And also just paying acknowledgement that when we do value nature and we seek for who's best to guide us on our journey to value the importance of nature, traditional knowledge holders, Indigenous people who've remained connected to country are often, and in most cases, our best source of information to guide what nature was like before, what it's like now, and what it could be going forward. So just paying that respect. The work of the TNFD was really centered from day one on one of the really key pillars of how do we measure and value nature. In the initial working group, along with how do we define nature, was also a working group set up to consider measurement and metrics. And that work has continued through till the final release and also continues on beyond the final release to start to continue to close some of the key gaps around measuring and valuing nature. So a lot of the conversations we'll have today will be kind of guided by the work that's been done by many who are involved in that task force, including both task force members and knowledge partners. I think just quickly, just to kind of set the frame, navigating the challenge between simplicity and a plethora of different measurements and metrics of nature is always going to be an ongoing challenge. The task force itself had a series of really healthy and hearty discussions around the drive for an ultimate singular value for nature versus what is an appropriate and suitable basket of metrics that we can use. And this really from day one, started to kind of cover different ways in which we can measure nature from both a risk and dependency perspective and also an impact and opportunity perspective. And these different ways of framing the TNFD framework, which appears throughout the actual disclosures and other components, also sat at the heart of the exercise to take a huge number of current and emerging metrics and measurement systems and how we can suitably and sensibly break these down to make them accessible. Just to kind of quickly start that there were over 3,000 metrics that were documented and uncovered during the TNFD development exercise. That list continues to grow, and certainly that number is too large for any one user of the TNFD framework to really make sense of. So trying to find this balance between an ultimate and possibly impossible single value for nature and a growing over 3,000 list of different metrics has been part of the challenge that the TNFD has sought to work through. What we found through this exercise and in this 3,000 metrics that were relatively few measures of dependency, most of the metrics related to impact and condition or state of nature, and that there was really no single or singular accepted measure or framework for how do we categorize this. So this was part of the work that the TNFD sought to work through. Just to set the frame a little bit more is, when we do talk about valuing nature or measuring nature, we often use languages such as extent, how large is a certain patch of nature either disturbed or in a natural condition, and what is the condition and how do we measure condition over time. This is also not always straightforward when we move beyond land into waters and into marine systems, where those key features of nature, the biodiversity elements, do move and are highly migratory. And actually having 1 hectare or 1 patch does not relate so easily for marine systems as it does for land. So this presents additional challenges. We also spend a lot of time talking about the significance of nature from a Western science perspective, those species that are rare, threatened, endangered, as well as those that hold values for different users and different stakeholders. And also we were able to recognize that that nature doesn't stand still. And I can't help myself but throwing in a couple of pictures of my favorite golden snub-nosed monkeys from northern China. This is a camera shot of some highly migratory young male snub-nosed monkeys, showing that even if you think you know where they occur, they often deceive you and move into different patches of the forest. And also finally, and really importantly, as I've mentioned and we'll hear today, is that nature is valued very differently by all of us. What is important to me is different to all of you, and also recognizing that different systems that we use for bringing in both a cultural and an ecosystem service valuation to nature somehow needed to be captured within the work that the TNFD was doing. So today is not to unpack all the recommendations that came out in September with the TNFD, but it is to focus on where do we consider the value of nature and where do we consider recommendations for metrics and measurement. And it's really in 2 key places. Number one is at the heart of the actual disclosure recommendations themselves. Within those disclosure recommendations, there is really clear signposts for where do you need to start considering and self-selecting, or with the guidance of others, appropriate metrics to look at both impacts and dependency, as well as risks and opportunities. And there is also further down the pyramid that is the TNFD framework, heading into both the sector guidance and the biome guidance, there is additional guidance for selecting metrics that are specific to different sectors and subsectors, and also that are unique for considering these different measurements across different biomes of nature. So starting to touch on some of those issues around land versus freshwater versus marine, and what the different biomes require in terms of how we measure for nature. So this is the final recommendations. This is the set that appeared, and we have really, which is quite exciting, a central pillar, one of the 4 pillars of the TNFD recommendations, which is focused exclusively on metrics and targets, with 3 disclosure recommendations and 2 in particular that are focused on the need to disclose the metrics that have been used by organizations to assess both risks and opportunities, and also to assess impacts and dependencies. So at this level of the recommendations, not being specific around which measurement should be used, still enabling an organization based on their nature and based on their materiality and footprint to be able to select what is appropriate, but a requirement for all organizations that are disclosing to disclose the metrics that they've been used. The goal is to ensure that all metrics that are used need to evidence that they're based on principles around being science-based, being practical to collect, that are decision useful, and we'll get to that in a moment, that are able to support both cross-sector as well as sector-specific impacts and dependencies and risks and opportunities, and also that they're assurable, that the complexity of data that's used and the metrics that are collected is able to be assured and provided confidence to a range of different users of the disclosures, and ultimately that they're aligned with the goals of the Global Biodiversity Framework. The TNFD approach, which was a really exciting journey for a number of us, and I think a number on this call to kind of go through and observe through the different beta releases, was to start at this level of these realms of nature. So looking at ocean, freshwater, land in particular, and then breaking it down to indicators. So what is being measured, and then moving down to the level of metrics. So the actual measurements in terms of that you're going to need data to assess for. And on this slide, you can see a couple of those examples. So for just taking one of those, for extent of ocean use change is the indicator, and the actual metric is the extent of ecosystem use change as an area by type of ecosystem or business activity. So in this case, an area-based measurement or metric was selected as an appropriate measurement for looking at change in ocean use. The TNFD approach also worked through that process of finding it really difficult to get consistency around the state of nature or the condition metrics, which is a really important part of the process and something that we're continuing to work through, but really spent most of its time focusing on measurement of drivers of change. And these impact drivers, which were well defined, but also were decided as a key starting point, because it's just, to a certain extent, it's easier to start with these because you can attribute these to both business and business activity and also to finance and finance activity. So using these 5 big impact drivers, starting to look at where a business model or a business system interacts with these impact drivers, where it contributes to them positively or negatively or potentially negligibly, to be able to understand where there is both impacts associated with changes in the state of nature or dependencies around ecosystem services. The further step that was taken in breaking this impact driver framework down for selection of metrics was also looking at, as I mentioned, at both positive and negative, and being able to allow for measurements of both of these for organizations in their disclosure to be able to document interventions and programs that were having positive impacts on these drivers, but also giving full consideration for how do you measure changes in negative impact on those drivers. And that there would be a requirement for separate reporting or separate assessment in many cases of those positive and negative drivers. So the actual recommendations that were fed through from that large amount of work to start to break down and categorize that over 3,000 metrics into those different categories was to arrive at a series of core global metrics. And in the final release, we saw 14 core global metrics. And they were chosen because they applied to the most wider variety of business models and sectors. So that was a good capture around these global metrics that were relevant in most cases to all sectors. And there's still allowance within the disclosure to actually be able to document or disclose exceptions. But in most cases, an organization should over time have the ability to start to be able to disclose against all of these 14 metrics and to report on an ongoing basis. So this is the actual set of list of core global metrics, specifically around impacts and dependencies. So of those core metrics, 9 relate specifically to impact and dependency, and they're focused around those 5 drivers of change, those impact drivers that we've mentioned. You can see here on the table, this is how they've been presented in the final recommendations. If you are to select a specific driver of change or impact driver, you can then see which of those indicators are most relevant, and from those there is a recommended metric to be able to use. Most detail has been provided around impact drivers associated with land, freshwater, ocean change, pollution removal, and resource use and replenishment. And this is where there is a lot of existing information already out there. And we'll hear today from Liam and others around where you can go to find some of those additional metrics to support some of these indicators. The work on climate change and documenting and disclosing and measuring impacts on climate change is also a key part of the TNFD framework, but is not detailed in full within the TNFD recommendations because the TCFD already does a really good job of that. And to a certain extent, IFRS also has really clear guidance around the selection of climate change metrics. And then finally, the two other drivers of change, or these broader categories around invasive alien species, and also the state of nature for baselining ecosystem condition, is work in progress for the TNFD, and we'll be coming out with further guidance over the coming months. When we talk about risks and opportunities, that other disclosure requirement for those metrics that are selected here, we have an additional 5 metrics that have been recommended. And again, these have been split for where an organization wants to start to measure its risk and exposure. So including the value of assets, liabilities, and revenue in terms of its vulnerability to both physical and transition risks, and also describing the value of any fines or penalties actioned against an organization in the previous year related to nature-related impacts, which is particularly, I think, topical at the moment with the release of director duty guidance around nature-related risk. And then finally, around opportunity. And this comes last, but I think we're going to find over the coming months, organizations really wanting to engage further in this. How can they actually have financial metrics to be able to document the opportunity associated with making improvements in nature? So at the moment, there is a high-level metric recommended for opportunity mapping around the amount of capital expended or spent in financing and investing nature-related opportunities, and increasing the proportion associated with nature-positive products and services. But this is an area that we expect to grow, and we expect to see more metrics coming online to be able to support measurement against the opportunity side of the landscape. So what we have had is a deep dive from a sector perspective in terms of financial institutions. So for financial institutions which sit at the heart of the TNFD framework, 2 additional core global metrics for financial institutions to look at both data dependency issues and also to provide them with some guidance around where they start to focus across their value chain. And we're also, there's an expectation that financial institutions will also be using the core global risk and opportunity metrics as well, but they'll also start to see additional subsector or sector metrics come online with additional finance sector guidance. So this is where that sector guidance kind of sits as that lower pillar within the table. Expectation that all sectors, all actors and businesses will adopt the core sector metrics, but will also start to unpack sector guidance, which has been released and will continue to be released. So we've seen in draft with the final recommendations for these key initial sectors: apparel, textiles, extractives across both construction, oil and gas, food, forestry, infrastructure and the built environment, and electricity across both utilities and power generators, also capturing renewable energies, that there are, in many cases, some specific situations and existing tools and guidance that already has really effective and well-used measurement and valuation systems. So that's being carried across to the sector guidance to enable organizations to, in many cases, recognize what they're already measuring for, but also to have additional sector-specific issues that they need to consider when selecting the metrics. And there's also going to be additional metrics which are being for different users, and these have all been presented within the Annex 2 of the final report in terms of where the increasing information around additional sector metrics is going to be coming through the line. And this is a busy slide, and I'll move quickly on from this one, but just to kind of show that around the LEAP process as well, and the guidance that's around how to adopt and to employ the LEAP approach, there is also references to these sector-specific considerations in different steps in the LEAP process, and that immediately tags through to selection of individual metrics for assessing sector-specific considerations under the LEAP framework. And as I said, just finally, we also know for biome guidance, there'll be additional metrics around condition and state of nature. So just mindful of time, we've got lots of wonderful speakers, so I won't labor these 2 final points. We know that kind of going forward that the TNFD is I think for many of us, it is an exciting ongoing process. We're going to see, we have this additional 9 impact metrics, which is a really fantastic place for organizations to start. We're going to see additional work on state of nature and the condition of nature. The financial considerations, we're expecting to see more linkage between some of those non-financial and financial measurement systems, and also recognizing the cultural value of nature and the need to better pilot with the TNFD recommendations with IPLC and traditional knowledge holders to see how different cultural valuation systems can also align with this landscape of metrics. And this is just to finish up on, one of the really exciting developments, I think, of the last month or so has seen members of the TNFD also start to engage in the what does all this mean, not just for disclosures, but what does it also mean for activating finance, nature positive finance, and possibly around the emergence of biodiversity in nature markets. So the involvement of David Craig, the co-chair of the TNFD, in co-chairing the new Intergovernmental Panel on Biodiversity Credits Measurement Working Group is a really interesting transition for David, and the knowledge that's been built in the TNFD to see how can that also be used by organizations to start to capture some of those dimensions which are going to be relevant for activating new finance and new markets associated with biodiversity credits. So with that, I might hand the microphone back to Estelle.
Thanks so much, Guy. That's great. Look, just quickly, there is a question in the chat about whether metrics were selected independently of whether data is readily available to measure them. And I'm sure we'll get into a discussion about data during the panel discussion, but are you able to just shed some light on that?
Yeah, as I mentioned in those kind of criteria, scientifically robust, capturing all of those potential impacts and dependencies was the first, 1 and 2 kind of principles to be adopted. But the ability and the pragmatic and the realistic ability to collect and assess was also a really important consideration. So the availability of data was considered, but in many cases that's going to be quite different between different organizations at different maturities in their own journey, or having that data for various other reasons. And so we expect organizations to self-select in that first round. And there's an understanding and an acceptance from the TNFD that organizations may select certain metrics because they have good data or because they don't. They may not choose certain metrics. And that's, in the first instance, is okay. It's a bit of a get started on the journey and then slowly start to build out your understanding of those measurement systems as you collect that additional data.
Great, thanks, Guy. Well, let's move on. We're going to hear now from Liam Walsh, who is a Food, Land and Ocean System Lead at Climate Works. He's going to speak with us about how the Natural Capital Measurement Catalogue can be used to support TNFD reporting. Thanks, Liam.
Thanks, Estelle. I'm just going to quickly share my screen. Give me a tick. Okay, Estelle, can you just confirm, are you seeing that?
Okay. Thanks, yes.
Good. All right, hello everyone. Yeah, so my name is Liam Walsh and I work for an organization called the Climate Works Centre. I'm calling today from Wurundjeri land. I'd like to pay my respects. I'd like to acknowledge that sovereignty was never ceded, that it always was and always will be Aboriginal land. For those of you that don't know Climate Works Centre, this is an organisation based within Monash University, and our focus is on bridging the gap between research and climate action. And today I'm here to talk to you about a public resource that we've developed called the Natural Capital Measurement Catalogue, and to talk specifically about how the catalogue could be used to support TNFD reporting and disclosure moving forward. However, before I do that, I just wanted to quickly explain a bit about our focus on nature. It was some time ago that we started to understand as an organization that nature had a critical and potentially underappreciated role in supporting a transition to net zero. But what also became clear was that economic decisions were continuing to lead to the degradation of natural assets such as rivers, wetlands, and forests. And so a few years we started to explore what it would take to better embed the value of nature in decision-making, that being both government decision-making and also private sector decision-making. And one of the critical gaps to better valuing nature more appropriately that kept coming up again and again was the perceived lack of robust, consistent and comparable approaches to measuring natural capital. And this is really what started us on our this journey in the natural capital investment initiative, which I'm going to talk about a bit now. But before I do, I just wanted to start off by explaining a couple of the terms that will probably come up again today. You'll hear other members use them, and in explaining these terms, it might help make sense of the catalogue before I get on to talking about that. So I just wanted to very touch on the difference between natural capital accounting and natural capital assessment. So natural capital accounting, in a sense, applies to entities that own or manage land. And as it said on the screen there, it provides an approach for those entities to measure the environmental assets that they manage, to understand how they are changing, and then also to understand how that change might impact the flow of benefits or ecosystem services that they provide. Natural capital assessment is broader in focus, so it takes a more organizational focus, and it can apply to all entities, whether they own or manage land, and helps provide an understanding of a particular entity's role in a change in the state of nature. Now, the reason why I just want to point this out is that both natural capital accounting and natural capital assessment provide important and complementary information on the state of nature, and that's going to really help and assist with natural capital reporting and disclosure. And hopefully I'll be able to bring that to light with an example a little bit later on. But coming to talk about the catalogue. So the ClimateWorks team has been working on the natural capital measurement catalogue for several years now. And we've been working closely with a range of stakeholders from across the sector. Just recently, we released a new version of the catalog. We moved past sort of the proof of concept and launched version 1.0. And it is now sort of a website, and I'll share the link for that a little bit later. What is it? Well, the catalog is like an open library. It helps users to measure natural capital. So it lists a number of evidence-based metrics and methods that are fit for a particular purpose. It is really this living resource that will continue to be refined and expanded and tested over time, and really with the view that we hope that it supports consistent measurement of natural capital for a wide range of applications and users. The main aim in developing the catalog was really to promote that consistency in measurement across different users. And so in developing the catalog, we had a wide range of potential users in mind, including major corporates, financiers, government actors, industry peak bodies, research organizations, and of course, land managers as well. And it was developed, with the recognition that this is a constantly evolving space and that there is always going to be scope to add further sort of metrics and methods as we progress. I'll just give you a brief overview just to explain the structure of the catalog and how it relates to some of the other frameworks and methods, tools, data platforms, because there are a lot of those different things out there. So the catalog is divided into two main sections, one for natural capital accounting and one for natural capital assessment. And as I explained earlier, the section on natural capital accounting is mainly applicable to entities that either own or manage land. It can help to understand the extent, the condition, and the benefits associated with those natural assets, whereas the natural capital assessment section is applicable to all organizations. It can help them to understand how either their own operations or their supply chains either impact or depend on nature. And the catalog includes a number of fit-for-purpose metrics for both of these uses and draws on a number of important international frameworks, including the United Nations System of Environmental Economic Accounting, better known as UNCEA, the Natural Capital Protocol, and the Task Force for Nature-Related Financial Disclosures. So both these different sections provide users with information on what they could measure and how they measure it. And then the next level down for that is in sort of the how to measure bucket. Is there are a range of methods that we're starting to document in the catalog that can show users how to collect and transform their data. So these methods have been developed by a range of other groups. There are many different actors in Australia who are developing, certifying, and auditing different methods, both public and private. And so we are starting to catalog some of those methods as we progress. And then the catalog then also will help to connect different users with publicly available data sources and tools moving forward. And again, the main aim in developing this catalog is to promote consistency between various actors that are either already starting to measure natural capital or will soon be measuring it. So just to quickly talk about the catalog and TNFD alignment. So I spoke about the two different sections, and it's really the section on natural capital assessment that's the one that's most relevant for the TNFD. Although there are some metrics in the accounting section that can support disclosure as well. And this is something that Guy touched on in his presentation. So the catalog has good alignment with the TNFD core metrics and also the additional disclosure metrics that came out as well. So with each release, we've been checking for alignment and also had a role in feeding into the development of those metrics that have been selected. And the catalog can mainly support, I think in previous discussions at workshops, you would have heard about the LEAP approach, and the catalog primarily will help users as they negotiate the evaluate phase in that LEAP framework when they're trying to understand organizational impacts and dependencies. And it can also potentially help a bit within the locate phase as well, when organizations are trying to understand what their interface with nature is. Now, I guess the important point to be made here is that the TNFD core and additional disclosure metrics are deliberately broad, and this makes sense when you think about the breadth of different sectors and biomes that they need to cover. I think the value in the catalog is the depth it can potentially offer. So for example, if you think about an additional disclosure metric that they've included, such as the level of ecosystem condition by ecosystem and business activity. Measuring ecosystem condition in a specific location will be really context specific. And as I've sort of mentioned, there are a number of actors that have, in Australia that have developed specific methods to help assess ecosystem condition. And so what the catalog does is it provides that kind of next level down. It helps to pinpoint the specific methods that can help companies undertake measurement in the Australian context, but that can then be used to report on their actions at a global level. This here is just an example of the way in which the TNFD is currently referenced in the catalog. This is likely to change over time as we collate more feedback on use. We'll be better able to demonstrate the alignment and to provide more guidance on how these two different things relate. And then finally, I just wanted to share my 2 cents on the term nature positive, which is likely to come up a few times a day, and we may end up talking a bit about this. When you look at the Task Force on Nature-Related Financial Disclosures website and look at what they were intending to do as part of this, one of the things they talk about is that they want to see or support a shift in finance away from nature negative towards nature positive outcomes. And there are all sorts of different definitions that are starting to emerge to explain what is meant by the term nature positive. I guess the one thing that I would say about this is that one of the things that companies are going to have to do is to really understand the causal relationship between their company's actions and the change in the state of nature that they cause. And to understand this relationship, they're going to require both footprint or impact driver metrics, as Guy mentioned, as well as state of nature metrics. And the natural capital measurement catalog includes metrics across both these domains. And so we're really hopeful that moving forward, the catalog could become an important reference in Australia that helps different entities to understand how they begin to measure nature positive trends. And so if you'd like to learn more, there's a website for the catalog that you can visit there. But for today, thank you very much for your time, and I look forward to chatting about this in greater detail. Thank you.
Great, thank you so much, Liam. That's wonderful. We'll move on now to hear from Radha Kapali, who has had a long career in asset management and carbon finance, including 17 years at New Forest. She is a non-executive director at Accounting for Nature, and she's going to speak with us today about natural capital accounting and bring an investor perspective on that as well. So thank you so much, Radha.
Yeah, thanks, Estelle. Lovely to be with you all. But as Estelle said, we'll try to kick off today with a bit of an investor perspective and then talk specifically about accounting for nature and our work here in Australia and also internationally. So I think the first point that I wanted to kick off with is to note that markets require infrastructure for the transition from nature negative to nature positive outcomes, as Liam just referenced. So, through this conversation, we know that there's a global consensus that humanity has to transform the world's economic system from nature negative to nature positive. But the financial market infrastructure required to support a nature positive economy or economy trending towards nature positive doesn't yet exist, and we must build it quickly to deal with governments, consumers, investors, banks, insurance providers, employees, all of those who are demanding quick change. And so when we think about that market infrastructure to be able to see whether we're trending in the right direction through the products and services provided by the economy, I think it comes down to sort of 5 critical things that we need in terms of market infrastructure as we talk about this conversation around metrics and measures. So the first thing is that we need high quality, or if you were, unimpeachable standards and metrics for measuring the actual change in condition of any environmental asset class. So this is the state and condition of nature that we've been talking about this last half an hour. And we need to be able to do that anywhere in the world at any scale. Secondly, we need rigorous science and scientific methods based on those standards that are developed by recognized experts and a process that's rigorous and transparent. Third, we need environmental accounts. In the same way that we have financial accounts prepared by, accredited accountants, we need environmental accounts that are prepared by credentialed analysts that are independently audited and certified by independent bodies. Fourth, the data needs to be current, easily accessible, supporting a variety of commercial applications. And finally, we need transparent reporting of outcomes. And so what that means is that we should be imagining a world where not only is a company producing its annual financial statements, but it's also credibly and in an audible way producing its climate statements and its nature statements. And that's the world really that we're talking about right now. Next slide. So what happens if we have that infrastructure? Well, as Guy alluded to in his presentation, we're not just talking about risks and nature negative, but really we want to move to a world where we're enabling new nature positive business models and value creation. So if we have this kind of infrastructure that allows us to measure improvements in the state and condition of nature, a whole new world of products and services around nature positive starts to emerge. So here's a diagram that I put together that starts to bring some of these things together. So if we think about commodities, we can see more opportunity for markets around regenerative agricultural products, backed by credible claims. We know that there are companies in the mining sector who are thinking about linking mining products linked to nature restoration. Certainly in environmental credits, increasingly carbon project developers want to have not only the climate mitigation measurement, but also nature impact as well. So they can effectively sell nature positive carbon credits. And also, has been alluded to in Guy's presentation, there's growing interest in nature and biodiversity credits. But broadly, I think it's a little bit cut off here at the bottom of the slide, but in financial products, we could start to think about nature-linked bonds, nature-positive asset classes, and new marketplaces and impact exchanges that funnel capital and debt and equity instruments towards nature-positive businesses. And then, as we've been talking about in this whole conversation, we need this market infrastructure to have credible impact reporting and disclosure that underpins things like TNFD and ISSB. And this is urgent. We just noted that the legal opinion came out in Australia last week or the other week about nature risk as a liability for directors and companies, and this growing international recognition around the need to reverse economic risk from biodiversity loss. Next slide. Why did I join Accounting for Nature as a board member about a year ago? And well, that's because, I see Accounting for Nature as part of this critical market infrastructure that's needed around the world to underpin nature positive claims, credits, sustainable food and fiber products, disclosures, corporate investment. So for some of you, you may not be familiar exactly with what Accounting for Nature is. So I might just give a little bit of the history of where this standard came from. So in the early 2000s, the Wentworth Group of Scientists, which is a leading, non-governmental scientific organization here in Australia, decided that, we needed a way to simply and easily communicate state and condition of nature and be able to measure return on investment from investment in nature. So over the course of more than 15 years, and with the work of more than 200 scientists around the world here in Australia and internationally, they developed a standard, which eventually got spun out in 2018 into Accounting for Nature, which is now an independent organization housing AFN as a independent and globally applicable standard for measuring state and condition of nature. And what makes Accounting for Nature, I think, quite unique is that it converts world-class science and methodologies developed by project proponents into a simple index called the econ, or environmental condition, that anyone can understand and that markets can use. And the econ is effectively a measure that boils down state of nature. I'll talk about that in a second, in a measure between 0 and 100. So 100 being a reference benchmark, which is basically an undisturbed, simply put, sort of more undisturbed state of nature, with 0 being a lack of ecosystem function. And so we can think about, let's say, more regenerative agricultural practices being maybe in the, 60, 70, 80 index, or where you've got really intense agricultural practice, maybe thinking about parts of the wheat belt of Australia where things might be under, the econ might be under 10. And what makes this unique is that it becomes effectively a universal measure of environmental condition, which can be applied to soil, water, vegetation, fauna, and applied not just in terrestrial ecosystems, but also marine ecosystems as well. And I think the thing that's also very important, what Accounting for Nature has done, is create a certification process that's robust and provides third-party assurance and auditing of these certified environmental accounts. And that's really what enables disclosures, claims, and transparency for those project proponents who are using Accounting for Nature. Next slide. So it's been extraordinary to see what's happened in just under 5 years. Since 2018, Accounting for Nature has registered over 50 environmental accounts covering more than 8 million hectares across Australia, including agricultural, forestry, carbon projects, and conservation land. It's quite extraordinary. We were looking at some data in the past couple of weeks. There's just been an increasing drumbeat of interest in Accounting for Nature from increasingly from corporate and institutional owners of land. And they're using this because they're interested in making land management decisions and also thinking about setting themselves up for the future. So, for example, AACO, which is Australia's oldest agricultural company, ASX listed, has 6 million hectares of agricultural lands, including cattle properties, is developing AFN certified environmental accounts to support their transition to nature positive. Green Collar is working with Accounting for Nature to develop world-leading issuance standard for nature credits. We're working with the Digital Finance CRC also to think about the integration of AFN into the next generation of issuance tracking and surrendering of nature-related credits. But this just isn't an Australian standard. I think what's been really exciting is to see that the TNFD has recognized AFN as a highly credible and scalable exemplar for measuring state of nature as part of its overall framework. And we're getting increasing interest from Europe as well in the use of accounting for nature. So I think I might just leave it there. Just next slide. I think just to note, similar to what Liam said, trust is really in high demand as we think about addressing greenwashing, the carbon credit markets, and scaling more capital into climate positive and nature positive outcomes. So this is certainly an important discussion to be having now. So thanks, Estelle, and look forward to the rest of the discussion.
Great. Thanks so much, Radha. And everybody, Radha, Guy and Liam are here to answer your questions. We're also joined by Libby Pinkard, who is an eminent scientist. She is Director of Living Landscapes Program at CSIRO Environment, and she has been instrumental in drafting a very important resource here. So I'll start with Libby, if you don't mind, and just ask you a question about the CSIRO handbook and TNFD. How does the CSIRO handbook deal with natural capital accounting, Libby? And what are the internal processes and so on that companies can use to support registers of nature-related risks and opportunities?
Thanks, Estelle. In answering that question, I might just go back a step to the rationale for the approach that we've taken. So we've been involved at CSIRO for a number of years now in developing tools, models, data and guidance material to support organisations in the practical application of international frameworks like the SIA, the Natural Capital Protocol and the TNFD. And through our interactions with various sectors, we've had a lot of stakeholder discussions, and there's been a really strong message coming through that people are interested in engaging in this space, but they're really struggling to articulate their value proposition. And there's a lot of confusion about the what and the how of doing nature-related reporting. So the Natural Capital Handbook is something that we've developed initially for the forest industry, but more recently we've generalised it into a handbook targeting corporate Australia, but it's a fairly general sort of document with the aim of providing guidance on natural capital accounting and impact dependency and risk and opportunity assessment and reporting. And importantly, I think providing examples of what to present and how to present that. So what we've tried to do in this space is pull together a lot of information, bringing together different standards and frameworks and example approaches, not to replicate what's already out there, but really to provide that practical how-to guide that points towards sort of resources and supports that organisations need to make informed decisions about their approach and what will be best for their needs.
Great, thanks, Libby. And we'll put a link in the chat to that, and we'll also send out to everybody as post webinar resource a whole lot of links, including a link to the handbook there. I'm just wondering, Libby, could you talk about how the advice that's contained in the handbook aligns with traditional accounting practices?
Yeah, sure. So I guess I'll go back a step. The handbook provides a very clear differentiation between natural capital accounting and the nature-related risk assessment along the lines that Liam's already described. But we've made a real concerted effort to align all of the reporting with financial reporting to make it a bit easier and a bit more a bit closer to what people are used to. So again, thinking about how you can simplify the story. So to that end, we've identified 5 key disclosure statements that together can form a holistic picture of a reporting entity's interactions with natural capital. So firstly, there's a natural capital balance sheet and a natural capital income statement, which are principally applicable to those entities that own or control their own natural capital assets. And these are closely aligned with their financial equivalents and can be used for natural capital accounting and for internal decision making. And then we have a natural capital impact statement, a dependency statement, and a risk and opportunity statement, which can be used for risk disclosure and sustainability reporting. And the two are quite closely aligned. So, the accounting approach can inform the impact assessment, the risk assessment component as well. And so the handbook also describes why you might want to undertake natural capital accounting or risk disclosure, and then provides that step-by-step information of what you actually do.
Great, thanks so much. I think that a lot of that language will sound very familiar to a lot of people. There is a question in the chat around, we're talking here about the facilitative infrastructure that's needed, Radha. I think you mentioned that. And so the question to any of the panelists, feel free to jump in and answer, whose role is it to build this facilitative infrastructure?
Well, Estelle, maybe I'll jump in, just giving the AFN history. In fact, the standard that was developed by the Wentworth Group of Scientists was, in fact, initially intended to be public good. So that, and the Australian government at the time was thinking about developing national environmental accounts. And so the standard was developed as potentially as a piece of infrastructure to support that. And then, it could be used more widely. So certainly there is a role here for, I think, government to play in thinking about creating standards that everybody is using, and ultimately that these roll into frameworks and disclosures that are understood and used around the world. But that's not what we have right now. And so I think that is why you've got civil society coming together to create standards or create frameworks. And in fact, those are then getting adopted by the regulators. So things have seemed to move sort of in the other direction than coming down from government. So that seems to be the kind of place that we're in at the moment.
Great, thanks, Radha. Another question in the chat for you, Libby, about the handbook and whether or not it helps investors or businesses or both.
So while it's been written to support businesses, I think it can very much help investors as well. So, for instance, investors could be working with those they're investing in around the sorts of information that they require and the way that information can be presented. And I think that the handbook can help them to think about the way that information is presented and structured in their discussions.
Great, thank you. Liam, I might just ask you a follow-up question about the natural capital measurement catalogue. Is this the only one kind of out there, or are there other tools available?
Thanks, Estelle. Well, as far as we know, there isn't another catalogue like this in Australia, and probably not globally. We tend not to talk about the catalogue as being a tool. We haven't quite got the sort of right word for it. It is a catalogue of measures that helps pinpoint and identify other tools that can be used to actually measure the state of nature. So that's, I guess, one point I would make. There are obviously a range of tools that are out there to support measurement. I think if you go onto the TNFD website and sort of search for tools, I think they already have, over 150 or close to that. So I think the challenge for a lot of businesses is how they actually navigate that, how they work through that. And I think the TNFD are doing the best they can to help businesses navigate all those different tools. But yeah, as far as the catalog is concerned, we really see it as an important reference or guide that sort of helps users on their journey, and then get down to the point where they can then select tools that are really appropriate for what they actually need to measure.
Thank you. I might put this for you guys. There's a question in the chat about examples of what we consider best practice for TNFD disclosures. If you could point everybody in the right direction there. And then secondly, I did have another question about the Science-Based Targets Network, which is an international body of organisations. I think the UN, the World Wildlife Fund, UN Global Compact Network, and so on is involved in this. And it was established to help the private sector set science-based emissions reduction targets. So just wonder if you could speak about how TNFD aligns with the SBTN and how the SBTN itself approaches measurement. So two questions there in one, if you don't mind.
Yeah, no problem. And I'll just it's quite an early start here in wonderful Hanoi, so apologies. I'm just waking up, I think, after my early blurry-eyed presentation. I'm just dropping a link in the chat on the TNFD website under publications. You can filter by case study. I'll drop a link. It's a really easy way to kind of go and find a long list of example case studies of TNFD aligned or TNFD early disclosures. So I'll share that with you all in a moment. In terms of SBTN, like that's also been part of the journey over the last couple of years. And I think I can say in the early days, there was a little bit of confusion both in the market and across both camps of the TNFD and the SBTN in terms of how they would align. But where they've arrived with the final recommendations is, I think, a really exciting place. We have, as I mentioned it before, we have, disclosure recommendation 14, which is specifically around describing the targets. There's also been in the part of the overall final recommendations, there is around target setting that's been co-published and co-developed by SBTN and TNFD. So that target setting guidance is, clearly shows the alignment between the two frameworks and how organizations can make sure that they're not doubling up or duplicating effort. And I think the other really interesting thing which the TNFD has really supported is the actual approach to target setting kind of follows quite closely with that idea around the realms of nature. So the SBTN have released some early guidance around target setting for freshwater, and then land and ocean will kind of follow in soon. And in all of those publications from both the TNFD and the SBTN, kind of from here on, from final recommendations, and will clearly signpost and tag between the two frameworks. Target setting is a really important and critical pathway towards that kind of nature positive framing that Liam and Rudder have spoken about. That's really critical, and disclosing how you measure and how you kind of make steps towards that target is also something that's the domain of both TNFD and other initiatives. So both really well aligned. I know at Climate Week, when the TNFD was launched and Rudder was there for that, SBTN and TNFD sat very happily on a lot of panels discussing their alignment. And I think it's going to be really productive going forward.
That's great. Thanks, Guy. Look, there's another question there in the chat that goes to consistency and reliability of some of the estimates that are being used. So, and that's referring there, Liam, to the Climate Work spreadsheet has internal records as less reliable than third-party estimates of Tier 1 versus 2. So I'm just wondering if you could answer that question about why that's so. And then, Libby, I might just ask you to elaborate a little bit on the metrics and the consistency in the metrics that are being used, and how we deal with uncertainty in the measures, as well as multiple lines of evidence. So over to you, Liam, first, if you don't mind.
Thanks, Estelle. And yeah, thank you, Claire, for the question. I think what Claire's referring to is the tiered approach that we have within the catalog. So we have a number of tiers in the catalog with different methods that are identified. And those tiers are really developed with the view that different actors are going to have different purposes for measurement, right? So in some instances, there may well be a land manager who is wanting to undertake some natural capital measurement simply to improve their own operational decision-making, right? But then there may also be a land manager who is not only looking to improve their operational decision-making, they're also looking to participate in, say, emerging environmental markets, right? And so what we tried to do in developing the catalog was cater to that. So, there are going to be actors with different purposes for measurement. And yeah, this was the subject of a lot of debate. We have a panel of experts that have helped to develop the catalog, and a lot of debate around the tiers, because, there are some internal records that potentially could be really reliable moving forward. But generally speaking, yeah, what we're trying to signal with those tiers is that different users are going to have different purposes for measurement, and different reasons why they want to kind of measure at certain levels. And again, we're not trying to be prescriptive about sort of you need to use this tier or that tier. We're just trying to provide as much open guidance on that. So yeah, just to say, Claire, happy to have another conversation about that if needed.
Great. thank you. And Libby, are you able to comment on consistency and certainty in measures?
Sure. And perhaps I'll focus on the consistency in data aspect. And of course, there are a whole range of types of data that you could use for this sort of reporting, and some of it is private data, and that's appropriate. And of course, the more focused your data is, the less easy it is to get consistency, both spatially and temporally. You can also use remotely sensed data that does provide you with broader consistency. It means that you can potentially compare right across Australia, for instance, but that comes with its own challenges as well in terms of accuracy, for when you're trying to hone, focus down into particular locations. It's a bit horses for courses. Both approaches are appropriate. You just need to be transparent about your reasons for using particular types of data and the approaches, and be transparent. You also asked around uncertainty, and I think that is an ongoing challenge for us in the way that we present nature-related information. It's something that requires a lot more work for us to do a good job of understanding and representing uncertainty in our nature-related reporting, but it's something that is really important as well, because you can present a number that might be, say, I don't know, 10 or whatever, and it could be highly uncertain, or it could be not much uncertainty around it, and that will definitely influence the way that you would make decisions based on that data.
Great, thank you. Look, we're running out of time for this panel. Just to quickly respond to a question in the chat about the International Sustainability Standards Board's next program of work, and whether or not they might develop work on biodiversity. Look, to us, it does seem like a natural fit for the next work program. They are considering other things like human rights and so on, as well as the priority of kind of consolidating climate and sustainability reporting, which is S1 and S2. So we're still waiting for them to let us know where they've come out on that. But a number of organisations, including RIA, made submissions to that. Just very quickly, 30 seconds or less to our panellists. Someone has asked about advice for investors starting out. Perhaps to broaden that, what advice would you give anybody kind of starting out on their journey in this space as a first step? Guy, I might turn to you.
Yeah, it's a really good question. As I've tried to allude to as well, I think there's been a bit of a misunderstanding, particularly from the investor community, that there's a lot in this. There's a lot of metrics and there's a lot of disclosure recommendations. I think it's really starting with one individual metric that makes most sense to you in terms of the nature of your investments and your materiality and exposure. And the TNFD provides direction in terms of those that you can select. So I think start somewhere and start with one and then build out from that. Obviously building out upon existing data and information that you might already have in your value chain.
Great, thanks, Guy. Liam, what advice would you give?
Well, maybe building on what Guy was saying a little bit, I think that maybe start simple, but also when we think about the world of natural capital, you're going to need expertise across economics, accounting, ecology, a variety of different spaces. And I think, one of the things that investors need to be able to do or think about is to bring on board people that can actually help support some of this work as it moves forward, right? There's going to be sort of people with a very different skill set that you're going to need to bring on board to help navigate this space. So really investing in those capabilities, I think, is going to be important.
Great, thank you. Radha, last word from you.
I think you have to get on with it. If you're a board director and someone told you that your company was facing a major risk, which it could impact your revenues, your systems, your supply chains, you wouldn't say, okay, well, that's just too complicated. We're going to just let it ride for 3 years and then we'll come back to it when we got more time. So I think it's really important that we as investors, use these frameworks to do due diligence, investigate, understand, and we have to prioritize. But I think we have the systems and tools there. We've just got to build it and integrate it into our governance and strategic frameworks.
Indeed, thank you. And Libby, final word before we move on to the next segment.
Oh, look, I'd say just have a go. Recognise that there'll be gaps in data. There'll be things that you can't do, but you won't know what you can't do or where the gaps are until you actually start to have a go.
Great, have a go. That's fantastic. Thank you, Libby, Guy, Liam, and Rada. Great to see you all. And we'll move on to our next session, which is we're hearing from Gareth Catt, who is the Desert Projects Manager from the Indigenous Desert Alliance. He's going to speak with us about the practice of managing country and how Indigenous knowledge can be harnessed to measure environmental impacts. Thanks so much, Gareth.
All right, thanks, Estelle. Thanks for having me here. I'm sitting here at home in the Perth Hills on Whadjuk Noongar country, looking out the window at the beautiful hills surrounding me. But the talk that I'll be doing today is really focused on the areas in the Western Desert, particularly the Northwestern Desert, where many of our members work. So the Indigenous Desert Alliance is a member-based organisation. We've got 26 Indigenous land management organisations as a part of the Alliance. This slide's already out to date. And our nominal footprint covers around about 2.7 million square kilometres, so about a third of the country. And we work mainly on Indigenous held land. There's around 68 ranger teams that are supported by those organisations looking after country. If I go to the next slide now, this is a bit of a short animation, which illustrates one of the really large landscape scale challenges that we're facing, which is fire. So you'll see, the spread of this black that's coming through is the hotspots that are indicating where an active wildfire is spreading through the landscape. And you can see the track that it follows, and it's about to get a bit more interesting. This is a fire which started on the Canning Stock route. It's probably an accidental ignition from an escaped campfire or maybe a vehicle fire, something similar to that. And it ran to nearly 80 Mile Beach, so over 600 kilometres. The scale bar that you can see, the bottom left-hand side there is 200 kilometres long. So very significant fire. Might be worth just playing it again because fire scars are something that I look at all the time, but probably not super familiar for people that are much more familiar with market infrastructure. So you can see it starting on the right-hand side, just there, takes off, spreads through, bounces around. You can see the areas that it's not burning. They're areas where Indigenous rangers have been doing prescribed fire, culturally driven fire in the landscape over several years. So the areas that haven't been burnt in recent times, or where there's little gaps, they're the areas that are being burnt by this very large wildfire event. You can also see a few points, well, I can see a few points where it was pulled up by fires that were then actively reinforced by firefighting from those ranger teams. So probably a bit of an abstract view for a few people, but really illustrates the scale of the issues that we're looking at, one of which is large fires in the landscape. And if we go to that next slide, you can sort of see what it looks like in reality on the ground. So on the left-hand side, that's a large hollow-bearing tree that was in the Great Sandy Desert. This is an older photo. So it's one I prepared earlier, not from the last wildfire event. But that was a tree that was burnt through in a very large hot wildfire. And you can see in the background there that there's really little to no vegetation 6 months on from that fire. Compare that to the right-hand side, the top image there. That's a cooler bar which had very heavy spinifex underneath it. And that was burnt by the Punmu Ranger team in rain. It was actually raining when they did that. And it meant that there was no canopy scorch to that tree, no damage to the stems, no damage to the structure of the tree. And while that's really important, is that there's a lot of things in the desert that depend on hollows. They depend on those things, those shelter points for nesting, for breeding, all sorts of different things, including the princess parrot, which I've included, on the right-hand side down the bottom. They're a threatened species. They're one of our priority threatened species in Australia. Got a small project on them, trying to figure out some of their habits. But they're one of those birds which is under threat from the increase of wildfires in the desert, which go largely unspoken of in Australia. Now, we see the solution to this as being putting people into the landscape. In this next slide, you can see some of the Punmu Rangers being led by Minyao Miller. So Minyao is one of the last men who walked out of the desert in the 60s. He's there, transferring traditional knowledge to that group of rangers behind him. So he's, leading the way with the fire stick. You've got the fellas in the background with matches, and they're putting in a fire break around some bilby habitat adjacent to some lake edges to the south of Punmu. Now, people being removed from the landscape is one of the reasons that fire has been able to proliferate in these really fire-prone areas. So, where you've got spinifex that accumulates slowly over time, If you're applying fire to that consistently by consistent interaction with the landscape, then you reduce that fuel load. You reduce the interconnectivity of it, and you reduce the likelihood of fires establishing, and then you buffer their impact when they do take off in those hot times of the year. So by finding ways to put people back into the landscape or encouraging people's practice in the landscape, we believe that we can buffer the landscape again, and we're seeing that already. And so that's one of the challenges, one of the solutions that we're looking at for that very broad scale challenge of fire in the desert. Now, we have been working on, accounting for nature, was mentioned before. I've got a slide. The next slide shows very, detailed slide on our accounting for nature method. So we've been looking at how we can better measure the impact of prescribed burning and culturally driven burning across spinifex sand plains and sand dunes, across that whole area that you can see illustrated there in that slide. So a very large portion of the region that we work in. We have looked at the carbon potential in this area. In the far north of it, we do believe that there is a carbon method which will be viable, although it won't be particularly lucrative in that area. But the value of people's practice in that landscape is something that we know to be very high. So by people applying consistent fire to the landscape, they can increase vegetation diversity, retain many of those legacy features like the tree hollows and the really old spinifex that wildlife values for shelter. And we can improve the condition of that landscape, not just for biodiversity, but also the cultural values of that landscape. Now, they can be improved through multiple means by people just interacting with the landscape. They know country, they know the place. That's really important for people's ongoing connection to place and practice. But it's also one of those practices which, as you conduct burning, you might be improving an area for, say, busted skipper, a very important cultural species for people that like to hunt. It might be improving green pick for red kangaroos, which are increasingly under pressure from extreme climate events in the desert. It could be that the fire promotes the germination of bush tomatoes, things like that. So those cultural values, those foraging values that are improved, but you're also buffering those large-scale wildfire events and making improved habitat for threatened species, for culturally significant species, and really protecting the environment from those very large-scale wildfire events. And if we just go to the next one there, sorry. Great. Well, I think that's actually all I've got there. So this is a couple of photos of the desert. So that's spinifex sand plains and sand dunes. People often think of these areas as being fairly empty, fairly void of life, but they're really culturally vibrant places. They're places that people feel a very strong connection to. Some of the latest contact areas in the country, and really an environment which has been shaped by the hearts and hands of people over a very long period of time. By finding some market mechanisms to be able to keep people interacting with the environment in the way that they've done for millennia, that can only be something that's of great benefit for us. Thank you.
Absolutely. Thanks, Gareth. Look, we do have a little bit of time for questions if anybody would like to put some questions in the chat. And great, we can see you now, Gareth. That's fantastic.
Yeah, sorry, I thought I'd started my video at the beginning there, but I've done well.
No worries. That's great. Thank you. And yeah, great PowerPoint as well, and really moving images there. Could you perhaps elaborate a little bit on the practical realities of incorporating First Nations perspective into environmental reporting, and what are the challenges that you see?
I mean, one of the really significant challenges that I see with this is that there's a whole lot of layers of interpretation to try and get this to the point where the people that we work with understand this. I mean, for me, sitting in on this TFND conversation this morning, we're talking about markets, finance, and the structure around that. Where I'm comfortable is doing land management in a remote area with an Indigenous group, doing something very practical where I can see the results of my work at the end of the day. To try and take it from this very abstract conversation about markets, which people in that conversation see as very practical, and then relate that to a First Nations group who have a very different worldview and significant language barriers, I think is one of the really big challenges. One of the other significant challenges I see here with this is there's a lot of talk around market infrastructure and how we build a framework for the markets and ways to actually purchase products. there's not as much conversation about what product development looks like. And that's how I'm starting to view what the work is that we do. So we've, been working on something which is based on Indigenous practice, ways to expand that, novel techniques to improve the footprint of the practice that we engage in. But that really requires a high level of investment, and a lot of that's coming from, philanthropic funding, from government funding, bits and pieces. We try and pull together these programs from a variety of sources. In the end, we're hoping we'll have a product that somebody will want to purchase. Will at the very least have a greatly improved land management practice. But investing in that product development side at the same time that market infrastructure is being developed, I think is really important. And I'm not sure how often that's thought of at this stage.
Yeah, that's great. That's a great answer. Thank you. I'm just wondering, there is a question in the chat about what advice you would give, given those challenges, to corporates who want to take the first step, corporates or investors who want to take the first step in harnessing Indigenous knowledge for the purposes of valuing nature. What advice would you give them?
I would say be curious and be patient. Things don't always happen on the time frame that you want, and building partnerships does take time. And you have to be willing to accept that things may take time, and work on a different scale to what you're used to. So it's pretty rare that we can get straight and direct answers in a really timely manner. So that's one of the things. But finding those intermediaries and advocates for the work that you would like to engage in, and trying to understand what the issues are, I think is really important as well. And there's different viewpoints on those issues. So some of the things that we often look at nature as being something that we should leave alone, something that we should just, put a fence around and say, yep, that's good enough. We've preserved that bit of bush. But for Indigenous people that we work with in the desert, that's not healthy country at all. Healthy country is a place that you interact with, that you're a part of, that you care for, that you belong to. And, acknowledging that distinction in the way that you view people's interaction with the environment is very important.
Indeed, well said. There is just one more question there around, given the obvious benefits to the mining sector of fire risk reduction, have you had engagement and support from some of the large miners who operate within the areas that you operate?
There's been some miner support from mining organisations that operate within our footprint. Most of the support has come from the mining sector, has come from BHP and the BHP Foundation, which has been outside of our area of our footprint. We've attempted to engage a lot with mining companies, but the one of the challenges that we have in the desert is that fire isn't something that returns every year. There might be a 5 to 7 year fire interval in a lot of places. And if you're a small company doing exploration, you have a big fire event that burns out $2 million worth of polypipe, which has happened a few times. You forget about that. The corporate memory isn't long enough to remember that that's a risk coming up. So there's an education gap that we need to try and address. And engaging with the mining sector on that, particularly the small miners that are engaged in exploration in the really remote parts of the country, is a challenge.
Indeed. All right, that's great. Thank you so much, Gareth. This has been really illuminating. Really appreciate your time and for engaging with us. And we'll send through some useful links in the post-event email as well to everybody who wants to follow up and get more information. And now we're going to move on to investigating the Cairns Airport and some of the environmental management practices and First Nations engagement that has been going on in that project. So we'll hear from 3 people that have been heavily involved in the Cairns Airport project. Lucy Friend, who is the Environment Manager of North Queensland Airport. Ashlyn Skeen, who is in Irukandji Ranger in that area, and Drew Lanyon, who is the Executive Director of Sustainable Finance and ESG at Commonwealth Bank of Australia. They're going to talk with us about the project, how it's incorporated environmental measurement and engagement with First Nations communities as a central tenet of the project. So I'll hand over to you all. Thanks.
Thanks very much, Estelle, and hopefully you can hear me
Yes, we've got you. Thanks.
Wonderful. Awesome. Brilliant. So we wanted to highlight a great example of a practical nature-based solution. And that was a sustainability linked loan with NQ Airports and the specific projects and things that are on the back of that. So NQ Airports is an example of a customer that have a great sustainability strategy and a range of initiatives across a number of different sustainability focus areas. But really they wanted to take that commitment to the next level. So what we did and what we're able to do is to work really closely with them in order to structure a sustainability linked loan. So sustainability linked loan, as many of you are aware, is a financing where the actual cost of that financing is linked to the client's or the customer's performance against defined sustainability targets. So if they meet their targets, they get a discount. If they don't meet them, they typically pay a premium to us as well. So these sustainability linked loan principles are structured, these sustainability linked loans are structured in line with sustainability linked loan principles. These are a set of market principles that have been developed by market participants to ensure that these loans are developed and structured in a robust manner so that there's some sort of framework for us to follow when we're actually structuring these transactions to ensure they're as credible as possible. There's a range of different elements within these principles that I'll sort of cover off as we go through. So SLLs to date in terms of targets have specifically or typically focused on environmental aspects and specifically emissions. So and the key driver of that is that the sustainability linked loan principles require borrowers to target their most material risks. And emissions being a very material risk for almost all companies. To date, we've seen almost all sustainability linked loans actually include an emissions target within their structure. And that was obviously the case here. So for NQ Airports, there's an emissions target with respect to reducing scope 1 and 2 emissions, and also to measuring and reducing scope 3 emissions is obviously really important for an airport. However, I think the really exciting parts of these transactions is on the second target, and this was an Australian first, where that target was linked to improving biodiversity and specifically natural species preservation. What was also great about this target was that it involved engaging the traditional owners to actually assist in meeting and achieving this target. And we're going to go into a little bit of detail around what that was. The third target is also related to Indigenous outcomes. So they have a target to actually improve internal Indigenous employment and also Indigenous procurement within their supply chain. So each of these targets are tested on an annual basis. So basically, that will determine how they've approved. That actual data is then assured by a third party, and then the discount or premium is applied in the following year. So this is a really great example of a transaction that had the environmental focus, but also had those sort of social co-benefits, which we think are really important, and specifically a nature-based target as well. So why haven't we seen many of these nature-based targets? So I think the key thing is around that the sustainability linked principles require the metrics themselves to be ambitious. The actual trajectory and the target they're trying to achieve over a period of time, they need to be ambitious, and that requires benchmarking and typically some sort of analysis around peers. So obviously with nature, as we've heard today, there's a range of different ecosystems that companies are operating in, and that makes comparing impact and benchmarking really, really difficult. So it's difficult to come up with targets that are actually comparable across different sectors or across different companies. We're really excited by the TNFD and specifically that the metrics work stream. We think that's going to be really terrific in helping to drive this market and in having some standardized metrics that we can actually build into our sustainability loans and bonds going forward. Industry bodies are also going to help. So we've seen ICMA, which is the sort of key governing body for bond transactions, where you can also do sustainability linked instruments. They've developed a range of example KPI by biodiversity targets, specifically to give borrowers comfort in terms of what sort of KPIs would be acceptable when structuring a sustainability linked bond. So again, it's just really helping to drive that market and give some sort of framework to borrowers to give them comfort around this. So why is this really important? I think it's important from a number of perspectives. As I sort of said, it demonstrates that nature-based targets are possible within these sort of structures, and it really provides a benchmark for others to follow. Now that we have a transaction with quite a specific biodiversity target within it, it demonstrates that it's possible to do for other transactions. To say, well, we've seen a actual transaction that has this target within it. Can we do something similar, but unique to our specific circumstances? From a CBA perspective, our purpose is around building a brighter future for all. And we, in terms of our Indigenous engagement, we're onto our 6th RAP and our 2nd Elevate RAP. So these sorts of initiatives really help us to deliver into our vision and also against our RAP commitments as well. I think finally, probably most importantly, what was really great about this target, as I mentioned, is it's around working with traditional owners, which is a more broad-based approach to Indigenous engagement than we've seen before. And it also recognises their strong connection as caretakers of the land within a target, within a structure, which we just haven't seen anything like that before. So all in all, it was a really tremendous transaction from our perspective that really is going to hopefully help to drive the market and really has that really strong connection between biodiversity and Indigenous engagement as well. And to that end, I'm going to pass to Ashlyn, who's actually working specifically on the project, to talk us through her experiences with it.
Hi there. So yes, I'm Ashlyn Skeen. I'm with working with the Cairns Airport at the moment as an Irukandji member. And what it means for me working on Irukandji country, firstly, working on country allows us as traditional owners to really showcase and actually implement the knowledge that we have, and obviously the knowledge that we've been obtaining for many, many years. The feeling I get from working on my country is a sense of pride and passion that not only comes from within myself, but also from within others gone before me. I'm so proud to call this place my home, and it's even better when I get to show others, which leads me to my next slide, working with our partnerships. When it comes to working with partners, it's important to obviously know who you're working with. So I think the research beforehand, before even engaging in the first place, is probably the best step to take. And that's on both ends, from us as traditional owners and also as partners coming to work with us. A good example of this is a blue carbon project we did with Deakin University. Before coming up, the team from Deakin actually did a lot of research on us, and as did we with them. And they just asked questions with obviously Lucy and ourselves about us as people and us in the work that we did. And I think that was just, even before meeting, I think that was just the first a really good step to take, because as traditional owners, we saw that we seen that they were actually engaging with us and trying their hardest to learn about what we are and what we do. So honestly, they just did stuff simple as YouTube videos, Googling us and asking questions, which I think honestly it was a really good step. And when we actually was meeting for the first time, no one really came with an ego. Everyone came with an open mind and clean slate, and just the thought of wanting to learn and actually listening, which on both ends obviously clearly meant a lot, which I think was a really good thing. And I think that this all comes down to respect. When engaging with traditional owners, come with the eager ear and open heart, because I guarantee you that is all the difference. And as traditional owners, we can tell when people are coming there because they want to, and when people are coming there just to tick a box. And I think it's important to come, obviously, because you want to, not because you have to. And before I hand to Lucy, I just want to say that I think one little thing is when you are wanting to work with people, I think one little simple thing is learning how to pronounce their traditional name properly and saying it properly is a really cool thing to know. And it's just like little things like that make all the difference. So yeah.
Thanks, Ashlyn. Hi, everyone. So as Drew alluded to at the start, so the airport already did have a pretty strong strategy around biodiversity. And none of the work that we do in the strategy or as part of the sustainability linked loan we could do without the partnership we have with the Irukandji people. So it's not just the surveys and the, you know, asking the elders where we can find the animals and things like that. It's been from the start designing the project. So we really do, we are lucky to have that long-standing relationship, you know, before the sustainability linked loan opportunity came up. But it was really good to have those discussions, you know, from the start and really build something together. So just, you know, in terms of an overview of what we've been doing, we've just finished our first year of that sustainability linked loan, which, you know, was a relief because it is, like Drew said, it's new. We had a lot of help from a lot of really knowledgeable people and organisations, but we still were quite nervous on, you know, how it would actually look when we started implementing it. So we've just finished our first 12 months. And what we were doing in that 12 months is really establishing a biodiversity baseline. So we looked at the whole area that the airport, within the airport boundary, and all of that is on Yirrkala country. We also looked at the waterway that goes through that land area. So we ended up surveying 650 hectares of habitat. And within that habitat, we have 8 different habitat types. So 7 terrestrial and 1 estuary. We ended up spending 650 people hours in the field. Most of that was, you know, dawn surveys and night surveys and trying to work around high tides. We obviously have crocodiles up here, so we're glad we were doing this in partnership with people who know when they're being watched by crocodiles. The idea was to see them before they saw us. And we also got 150,000 camera trap hours from that area. So we analysed a lot of data. We also did literature reviews and spoke to a lot of different organisations doing similar work to build an inventory of what species we have. We ended up with 1,200 recorded species within that study area. 13 of those species were identified as endangered under the Nature Conservation Act in Queensland. And also we identified 1 endangered habitat type, so the coastal rainforest type. And so from that work, so we ended up building that inventory. We had a lot of time to kind of think about it when we were waiting for tides to go down and things like that. And we chose 5 priorities for conservation for the next stage. So that next stage really is around looking at those priority species, so the ones that are endangered and ones that we think that we can have the biggest impact on, the biggest positive impact, and really developing site-specific plans for them to make sure that we're looking after them as best we can in that area. And it is only a small area, so we've been trying to involve different organisations and government groups and talk to a lot of people, because if this work can help in other areas, then we're all for that. So the species we ended up choosing, sorry, next slide. So one of them is the beachstone curlew. So we've got 4 breeding pairs on site. Actually, that's quite a lot for the area. We don't have people walking on those foreshore areas or dogs, so it's a bit of a stronghold for them in the region. And we've got just over 20 hectares of potential habitat for them. So we're looking at so the next year, the next stage is looking at how we might be able to manage that habitat to offer the best support to that species. So things like getting rid of cane toads so that the young ones don't eat toads and get poisoned, and removing fishing line and things like that is all part of the plan. The next species we chose is the water mouse. We actually didn't know they were in the region until only a few years ago, when an ecologist found one at the mangrove boardwalk just by the airport. And since then there have been quite a few surveys, and it turns out we've got a healthy population at the airport. They're really hard to find though, so we spent a lot of time, you know, tracking them down. But we ended up identifying over 450 hectares of potential habitat for them. And pollution is a huge threat to them, as is the marine debris and feral cats and things like that. So we're targeting that in our next round. The next species is so this includes plants as well. We've got ant plants here. They're a really interesting species that not many people have spent much time thinking about, but they are vulnerable under the legislation, and a lot of people collect them. They're rare plants. They're pretty cool. So we've got a big area that's restricted. Public aren't able to go in there. We've got, security fences and federal police and all that kind of stuff, which will give them some protection. So we're looking at increasing their habitat and also cultivating them and putting them back in the wild. The next species is the double-eye fig parrot. So the smallest parrot in Australia. They're very cute. They look great on all of our reports, and we know that they breed out in these areas as well. So that's one of our other target species. And the final one is the endangered habitat type. So it's actually listed as critically endangered under federal legislation, and we only have 3 hectares of it, but we know it's really vulnerable to climate change. And we've started doing cultural burns in this area, which will obviously help reduce those threats. But we're only just at the beginning of that, so we're really looking at how we can make sure those small pockets aren't going to disappear, because it's, for that habitat type, it's already pretty rare. So next steps for the project. So as I mentioned, so we've got the inventory, we know what's out there. We've got our priority species. We're looking at engaging with a range of different groups and individuals and obviously traditional owners for the area to talk about what those species need in this area, what we can do to help that. And then the subsequent years will be implementing those strategies. So, a lot of it will be to prevent pollution and to remove debris and feral animals and exclude, people from those areas, and unless it's for traditional practices like burning. So that's just an example. The sustainability linked loan really helped us to boost that biodiversity strategy that we had. And without the loan, we would really just be in that phase of making sure we're not doing harm to the biodiversity. Whereas, with that extra financial support and focus, we've been able to change that to actually doing good. So going above and beyond, kind of the corporate requirements that we have.
Amazing. Thank you all so much. That's a really fantastic case study. I'm just wondering, Ashlyn, I might just ask you, if you don't mind, if you could share with us what it means to you and your family to see you kind of working on country, protecting the environment, and so on. And how has this kind of financial structure helped to strengthen your work as a ranger?
Yeah, of course. So obviously family means a lot to me, and I think obviously I know that they're very proud of all the work that we're doing out here. It's nice that sometimes we get to take out our elders and they can actually see the work that we're doing ourselves, and obviously they have the most input out of everyone here. And so and I know that we all really take on what they say on board and really lead with it and go with it. And obviously we're it's good to see that people like Lucy, of course, and our other partnerships do respect our elders. And yeah, so it's nice, and obviously it's good to see. And I know my family love all the work that we do out here, so it's nice. And yeah, obviously now that with that new financial structure that we have, not taking away from the work that I was doing before, but of course now with the loans and stuff, it helps obviously heaps more putting this particular project forward and actually running with it, 100%. And I think obviously with that new financial structure, it helps a lot. So yeah.
Thanks so much. And Ashlyn, and maybe others could jump in as well. Just wondering what advice you'd give to corporates who want to take the first step in harnessing Indigenous knowledge for the purposes of valuing nature. Do you have any advice for those who are hearing this webinar?
Just simply reach out. I don't think no one bites. It's fine. But yeah, just come in with us with the utmost respect, and honestly, that just goes such a long way. And yeah, honestly, just go with respect and with a heart and mind open, and yeah.
Great advice. Lucy or Drew, did you have any advice there?
I think from our experience, obviously, the respect is a huge thing, and it enables those relationships to actually grow. But from a corporate perspective, I think there's a lot of fear around engaging, and worry that we're going to do the wrong thing or pronounce things wrong. But in our experience, we've just asked, and that's that's really helped. Like we don't know, we don't have all the answers, and it's really sometimes tricky when there are contested areas and different nation groups are competing for native title in an area, and it can be quite challenging, and we're always going to not always get it right. But I think, like Ashlyn said, coming to that discussion with respect and with a true intention of wanting that engagement. It's not to tick a box, but it's because we do value that input, and we couldn't do the things that we're doing without that input. But yeah, I guess just not being too afraid to reach out and start that relationship.
That's great, thank you. Drew, I might ask you to jump in if you don't mind about advice, and perhaps you could expand a little bit on where the impetus came from within CBA to do this, and what advice you'd give those in the finance sector to make the case internally within their organisation to bring this kind of criteria into financing decision making.
Yeah, sure. I think as I mentioned earlier, we have such a focus as an institution on Indigenous engagement, and so to the extent we're able to demonstrate these sorts of things internally, it's always very well supported. So I think if you're going on this journey internally, it's important to have that sort of all of organisation support for something like this. So it needs to be from the top down. Engagement with board in order to ensure that these sorts of things are able to be moved through an organisation, particularly when they're a little bit new or innovative. So it is really around ensuring you have that organisational alignment, which is probably the most important thing from our perspective.
That's great. Thank you, Drew, and thank you so much, Lucy and Ashlyn. That was really fantastic, and we'll all be following the next stage of the project very closely. Really appreciate your time and engagement today. And we'll move on to our next set of speakers, which is Sarah Kwan and Alex Banks. Sarah is the Assistant Director in the Government's Financing Solutions for Nature team. Shepard brings with her to that extensive financial markets experience, including in ESG. And Alex Banks is a partner in climate change and sustainability at EY. Both of them were heavily involved in some really interesting piloting work that went on earlier, and so they're going to take us through this, and this will be followed by an update from Anthony Benny, who's the Division Head of Nature Finance and Markets Division at DECU, Department of Climate Change, Energy, the Environment and Water, and he oversees, amongst many things, the nature repair market, the TNFD and the Nature Positive Summit. But first of all, over to you, Alex and Sarah.
Thanks, Estelle, for a lovely introduction. If you can go back to the first slide, Bryony, that'll be great. Thank you. Hi, everyone. As Estelle mentioned, I'm an Assistant Director in the Financing Solutions for Nature team. I'd like to first acknowledge the traditional owners of the country throughout Australia and acknowledge their continuing connections to the land, waters, and culture. I'm joining you from the Ngunnawal and Ngambri country here in Canberra, and we pay our respects to the elders past and present. I'm coming here to chat to you about the TNFD piloting project that I led for the department, and I'm here to talk to you with our project lead from EY. And I'll start to talk to you about the department's high-level purpose of the project and why we decided to do the pilots. Alex from EY will then talk to some details on how the case studies and that we published and how it can support you in the nature-related reporting journey. Next slide, please. Next slide. Thank you. My story in sustainable finance started in 2003. I was a non-financial investment analyst for a large fund manager. I think that role now is called an ESG analyst. I had the opportunity to assess ASX-listed companies for their policy and management of environment, the workplace, and corporate governance issues. Why am I telling you about this story? I wanted to highlight how hard it was for me to find information, credible data, which could guide analysts like me to make investment useful decisions. What I had to work with were, at most, a page on companies' annual report describing their annual tree planting day or a statement about their corporate social responsibility. Maybe some of you here may remember that as well. But 20 years later, there are substantial improvements. Last year, 196 countries, including Australia, signed Kunming-Montreal Global Biodiversity Framework. The GBF includes targets to increase public and private sector financial flows to nature and increasing corporate transparency on nature dependencies and impacts. My team has a vision to support and enable the flows of private sector capital towards activities that support positive outcomes for nature. To achieve this, we see consistent and credible nature-related financial disclosures, like what the TNFD is trying to do, an important part of the bigger puzzle. A chance to increase decision useful information in the market. For me, this is why I'm so passionate about the work of the team. Disclosures form a part of a broader sustainable finance architecture, and our head of division, Anthony Benny, will be talking to some of these broader nature-related developments later in the workshop. Australian government has been supporting the work of the TNFD over the past 2 years and sought to complement the TNFD's efforts by working with industries here in Australia. Not only have we funded and engaged directly with the TNFD, we also support RIA in its role as TNFD convener of Australia and New Zealand consultation group. Last year, we commissioned KPMG with a series of TNFD educational workshops with peak bodies. These workshops highlighted the need for an in-depth testing of the TNFD framework. So in January this year, we commissioned EY to pilot the beta TNFD framework, and it was one of the pragmatic approaches that we looked for to support an enabling environment for nature-related reporting in Australia. Next slide, please. We wanted to better understand industry readiness for TNFD-aligned reporting and find gaps in knowledge and access to data and the capability to use these data sets so that we could understand what role the government can play in this enabling environment. We also wanted to ensure the Australian economic and ecological context was fed back to the TNFD Secretariat for the global launch of the recommendations in September. So I'll stop here, and Alex will now share some insights from the piloting and explain how you can use the published value chain guidance documents to start your nature-related reporting journey. Thanks, Alex.
Thank you so much, Sarah, and hello, everyone. Bryony, I'm going to go slightly off script and share my own slides. I hope that's okay. You can hopefully trust me to know how to drive the screen. So it's wonderful to be here with you all, and someone please let me know if you can't see my slides right now. But I just
thanks, Alex.
You can? Awesome, fabulous. So yes, just to start by acknowledging that I'm dialing in from Wurundjeri country here in Naarm today, and to pay my respects to the elders past, present and emerging for this land that I'm on, and also to extend that acknowledgement and respect to the Aboriginal and Torres Strait Islander or First Nations people of the land that you're all dialing in from today. It's great to be here to talk to you a little bit about the project that we've been undertaking with DQ over the last nearly 10 months and to hopefully share with you a little bit of insight into how to read the reports. There's nothing like having to tell people how to read a report to tell you that the reports are complex, but hopefully you'll get a bit of insight into some of the amazing learnings that we've had the privilege of gaining throughout this process. So as Sarah mentioned, we kicked off this project formally in January of this year, and have been working with DQ and a number of pilot testing companies over the last 10 months. The purpose of the project, as Sarah's touched on, is to really identify industry readiness to implement the TNFD in its beta form, to have a look at what the gaps are in data and the systems that organisations have in place, and to make some recommendations into the market about how they can enhance their readiness to meet the TNFD and other voluntary nature-related reporting, and also to explore the role of government in this space, how the government can support organisations to take up voluntary reporting, and also to prepare for potential mandatory reporting at some point in the future. We took an iterative approach to the pilot testing essentially undertaking the testing with the pilot companies over about 8 weeks. And for anyone who's started doing their TNFD processes now, or who's halfway through the LEAP process, you can probably appreciate that trying to do the entire LEAP process in about 7.5 weeks was a challenge. So some organisations got further than others, some got all the way through to the end, but it was a really great exploration of different levels of readiness across different actors within the community. Sarah has also mentioned that there are kind of 3 types of outputs of this project, and I've included a QR code here on the slide for anyone who wants to direct link to download the public reports now, which are available on the DQ website. The first report that came out of the process was direct feedback to the TNFD Secretariat back in June. So we essentially completed the pilot testing and identified the main findings and recommendations to the TNFD itself about changes that could or should be made to the actual TNFD recommendations, and some of, not all, but some of those recommendations have now been reflected in version 1 of the TNFD that came out in September this year. The next set of outputs was a series of case study reports. So there is one case study report and then a series of value chain deep dive reports, which are now available on the DQ website. And then the third output of the project was an internal report for DQ, which is much more focused on that question around the role of government and potential policy recommendations. I'm going to talk through these outputs at a very high level. And the purpose of this is not to share every finding with you, because I couldn't possibly do that in 10 minutes, as much as I would love to. It's more just to give you a sense of how to read these documents, hopefully how to use them, and also, just to give you a bit of a hand with navigating, because there is quite a lot of information that's available now. Just a couple of comments, first of all, on the approach that we took. So we worked with 23 organisations, which was a combination of financial institutions and corporates, and then 4 peak industry bodies across 5 value chains. And we've called these nationally significant value chains. And the purpose here was really to bring multiple actors within single value chains together in the room to listen to each other and to learn from each other as each organisation worked through their own LEAP process, because as we all know, the TNFD recommends taking a value chain approach. So we thought it would be quite useful for all of the different actors across value chains to come together and to hear from each other about challenges and opportunities in taking up the TNFD, but also particularly for value chain actors further down supply chains, and also for financial institutions to hear about some of the realities of understanding the interface with nature, of preparing and providing data to downstream value chain actors about what that is actually going to look like. And then similarly, for some of those upstream operators who are typically closer to that interface with nature, to hear directly from their downstream stakeholders about the information that they're likely to need in order to meet their own reporting requirements in the future. This was an experiment. We hadn't done it in this way before, and I'm really pleased to say I think it paid off very well. It was amazing to hear the richness of the conversation within these different value chains, to hear different actors in value chains listening and learning from each other. And I learned so much about the way that different value chain actors are actually going to interact as we seek to take up TNFD disclosures in the future. You can see the 5 value chains that we looked at on the slide now. So starting with critical mineral mining for the production of clean energy technology. We also looked at natural gas extraction for industrial manufacturing. We looked at domestically sourced beef and salmon sold at supermarkets in Australia. We looked at the property development and building construction value chain for both residential and commercial property. And then we also looked at domestic cultivation of cotton for the export market. So just to give you a bit of a sense of what you can expect to find in the pilot case study report. So this is a larger, longer form case study report that's now available on the DQ website. And What this essentially is a consolidation of all of the findings of those 5 value chains in one place. The purpose of writing a single case study report like this was we had the benefit of sitting back and listening to all of the actors across 5 value chains, and there were some really resonant themes that we heard across all of them. So we did want the opportunity to kind of pull some of those threads together and say, we heard a similar message about data or about Indigenous engagement or about, baselining impact across all sectors. So everyone in the Australian economy needs to be aware of that. Or conversely, we really heard this very strong theme coming through from these types of value chain actors, which is also something that's useful. We think that the pilot case study report is particularly useful for financial institutions with diverse portfolios. So you can use this really as a resource to start those conversations across any type of value chain and to get some ideas or suggestions for how to engage with portfolio companies, throughout the economy. You will find in the report, essentially, it follows the structure of the LEAP approach. And for each stage of the LEAP approach, we have set out how the pilot companies actually tackled this approach. So kind of overarching comments about how they went about undertaking L1, for example. For each stage, we also describe what worked and what pilot companies found challenging. We include tools and approaches that companies took to that particular stage of the LEAP approach. And then we also include example outcomes for each stage of the LEAP approach. So I've just pulled out 2 examples here. For L1, some of the tools and data sets that were used by companies, and you can see that there's a couple of different examples there. And then this is an example of the way that the NEATS tool was used by a financial institution to complete L1, and a snapshot of what one of the outputs of that was. So there's lots of links in here to all of the different tools and data that's available in the market. There's lots of this worked well, or this was sort of missing, or here's a way to plug this gap in this tool or data that's available. So this is quite a rich report. There's lots of it's quite long, but hopefully it's almost a reference document that organisations can use and go back to and refer to as they start to work through the LEAP process itself. The next project output are the 5 value chain deep dive reports. So you will find on the DQ website links to 5 individual reports. And this is essentially a shorter reference document with lots of infographics and things in it, which is kind of looking at each of those value chains that I mentioned before. Each of the deep dives starts by explaining at a high level why nature matters to business and describing the national significance of the value chain that was selected. The deep dive report then goes into a summary of the nature-related risks and opportunities for that value chain, and then explores the value chain impacts and dependencies, as well as the risk-related and opportunities specific to that value chain. Each then also includes an action plan for implementing the TNFD. So the purpose of these reports is really to be a starting point or a launching point for value chain actors, which are relevant, and the kind of coverage of these value chains is quite expansive, and so it kind of touches on most aspects of the Australian economy. There are definitely gaps in there, but there is reasonably good coverage. And we kind of expect these documents to be used and shared internally, for example, with your leadership team, if they're looking to kind of get a sense of what this is all about and some practical examples of how this can play out. It could be shared with, for example, a customer or a supplier to give them some more practical information about what you actually mean when you're asking them to tell you what your impacts or their impacts and dependencies on are, or to provide, to other stakeholders, for example, your investors, your employees, your communities. So this is meant to be, it's a shorter document, it's about 10 pages each of them, with pictures and illustrations and examples in there. Just to show you a bit of what this looks like, we have the national significance of each of the value chains, exploring, in this example, which is around critical mineral mining, about why critical mineral mining is going to be really crucial for the clean energy transition, about how nature and the mining sector have kind of historically been connected and what some of the main impacts and dependencies are there, and then also about some of the unique aspects of this industry within the Australian economy. We also set out at quite a high level what some of the key findings are for corporates and financial institutions for each stage of the LEAP process. So, you know, I think a good example of this, a key finding for corporates when it comes to the locate phase, the first question to ask is, are you already doing any environmental compliance work? And if so, start there. You're going to have really good data if you're doing environmental compliance work. I have never met a mining company that doesn't have a very strong environmental compliance team. So start by talking to those people. If you're reaching out to a value chain actor who is within the mining sector, ask them to engage with their environmental management team. So this is meant to be kind of practical questions and advice to get you started as you're tackling this process. Each of the reports then summarises the key impacts and dependencies, and you can see we've kind of pulled out a couple of examples here. The value chain is essentially running down the vertical axis on the left there, so you can see a mining, alumina refining, metal processing, etc. And it's essentially identifying the low, you know, very low, medium, high, very high impacts and dependencies at each stage of the value chain across each of the different types of impact or dependency. So a very quick example here, we have a significant or a very high dependency in this is, I think this is still the critical mineral mining, yes it is, in the electric power transmission and distribution relating to flood and storm protection. So in the power transmission industry, there is a significant dependency on nature to provide flood and storm protection. This again isn't meant to be an exhaustive, in-depth, detailed analysis of every impact and dependency. It's meant to spark conversation. It's meant to spark understanding about some of the core concepts that the TNFD is asking organisations to do, and to put it into a really practical Australian-specific scenario that hopefully value chain actors across these 5 value chains can start to resonate with. Each of the case study reports also talks about some of the different risks and opportunities across the value chain. And the purpose of illustrating it in this visual way is that any actor across this value chain is going to have an appreciation of all of these risks and opportunities across the entire value chain. So, you know, you might be working for the metal product manufacturing company, or you might be investing via debt financing in building and construction, but you are going to need to you know, understand some of the risks and opportunities within the forestry and wood product industry, within metal ore mining, and so on. And again, this is just meant to help companies and financial institutions to understand and appreciate some of those interconnected value chain issues. The last thing that each of the reports sets out is this action plan. So this is very simple, practical advice for people getting started. We always start with building internal capabilities. It was one of the core findings of the project. But we also identify some of the key challenges and barriers to uptaking the TNFD across these different sectors. So particularly for the finance sector people on the call today, I encourage you to take a look at this and think about how these different challenges or barriers are likely to play out within your portfolios. You know, do your portfolio companies have highly specialised environmental science or ecology competence? And if not, what is your role going to be in supporting and uplifting that capability within each of those portfolio companies? How are they going to gather data, and what is the level of investment that's needed from different organisations in upgrading their data capability? You know, what are the indicators or methodologies? Is it appropriate for the financial institutions to be defining those, or are you comfortable to let your portfolio companies define them yourselves? Each of these documents is meant to spark conversations within your organisations. It's meant to support upskilling of various actors within organisations to get their head around the TNFD, but to do so in a way that really grounds it within the Australian specific context. And I guess the other thing just to say is we work quite closely with our colleagues in New Zealand, and we're trying to kind of cross-reference and discuss some of these issues. Of course, there is nuance to the Australian economy versus New Zealand, but I think these are really relevant reports for people within New Zealand as well, and financial institutions and corporates there. Just to finish up by touching on that TNFD Secretariat feedback, while this might seem slightly out of date now because the final report has come out, I do think there are some really interesting aspects of this and some of the key learnings that we set out in that report about how the pilot companies went about the testing. And just to give you a little bit of a sense of some of the challenges that we identified, and this first one is a critical kind of take-home message that I would give to anyone today, is about what we found a significant absence of board input or executive input in decision-making around scoping for TNFD. We have seen this reflected in the way that they have reframed the scoping phase of the LEAP process in the version of the TNFD which was released. But I really can't underemphasize how important getting your executive leadership teams and your boards across these issues as early as possible. And hopefully some of these outputs, it might be that case study report, it might be some of the summary information that's in the market, will support those conversations with your board members. I'm going to stop there because that's probably enough from me, but thank you so much for the opportunity to come and talk to you. And I also just wanted to say another huge thank you to all of the pilot companies who gave up so much of their time to create this knowledge for our economy. We have such a critical opportunity here in Australia to transition to nature positive. And I think they've done a really great service to all of us in giving their time and their expertise and their knowledge and being so open to the process. So thank you again.
Indeed. Thank you so much, Alex. And yes, for those wanting information about how to get started, do have a look at that action plan. And as I said, we'll be sharing some links with you all after this. Alex, just wanted to ask you a few questions about this work. It was obviously a major undertaking involving a number of organisations and sectors. What did you find most surprising in doing this work?
I actually think probably one of the most surprising things that I didn't appreciate going into this was how much knowledge and data and expertise there actually already is. I think we have this kind of expectation that we are starting from scratch when it comes to TNFD, and we are really not. It's just that the kind of historical mechanisms and processes for managing environmental impact have taken place under usually a different function and under different language and taxonomies. So one of the key things that we all need to be thinking about is what is the language that we've been using in the past in the environmental scientists, in the environmental management processes that we have, and how can we now transform that into this new world of financial disclosure and not start again with a lot of these processes. And that goes both ways. So, the financial institutions and kind of corporate sustainability functions need to be understanding the language of environmental management, and environmental managers and the scientists working with organisations need to understand that they need to speak this new corporate finance language as well. So kind of bridging that gap.
Indeed. Great. And perhaps Sarah, you might want to also jump into this. Most of the TNFD piloting globally has been done on a company-specific level or even a project-specific level, but you decided on a value chain approach. Why did you choose to go with that approach to this piloting work?
I can quickly try to answer that, Sarah, and then I'm keen, you chose us, so I'm keen to hear why you thought it would be a good idea. We did some pilot testing in APAC last year, so we did kind of APAC level pilot testing with financial institutions, and one of the workshops that we had for that, so we had 2 workshops in Singapore, 1 in Hong Kong, a couple in Australia, and then 1 in New Zealand. And the session that we had in New Zealand, and there might even be some of the people that were at that session, was such a light bulb moment for me because we actually had an entire value chain in the room that day. We had a dairy farmer, we had a supermarket, we had the financial institution that provides lending to both of those parties. And they had this amazing conversation and all of these epiphanies about how they could work together and share information. And it was just, it was a great kind of conversation to be part of. And, we as EY kind of went away from that saying, we have to do everything we can to try to bring value chains together early in this process so that they can start to appreciate each other's perspectives. And that's really what we wanted to try with this pilot testing. And I think the other thing that we were kind of reflecting on is that the value chains in Australia are so interconnected. You know, we have this kind of amazing microcosm where we do go from primary production to end user with financial institutions all in a single kind of geography here. And it was kind of a unique opportunity to see how it could play out over an entire value chain. And yeah, we really wanted to explore that.
Yeah, I think Estelle and also Alex, you mentioned that, you know, previously when companies were piloting the TNFD beta frameworks, they were mostly essentially one single enterprise. But I think it was, you know, having that value chain approach was a point of a difference between our pilot and other global TNFD pilots that we'd seen. And it's much more representative of the real economy out there. Businesses and financial institutions are interconnected in terms of the operations, business operations, but also their interface with nature. And I think, you know, the feedback that we provided to the TNFD Secretariat, I think it was much more closely related to real economy, its challenges and its opportunities. So, you know, giving us that holistic industry view. So that's essentially why we thought that value chain approach was the best.
Great. Would you say, Sarah, that this has global significance?
Yeah, I mean, you know, these days, unfortunately, with our pilots, we couldn't really look at sort of the global, you know, interactions between businesses and financial institutions. But I think sort of having a look at value chain perspective, it's giving that, you know, everything is now global. The market is global. So, you know, businesses operating in one country, they may be funded by financial institutions from another country. So I think just having that sort of the value chain would be approach would be a really good, you know, use of this piloting exercise. Unfortunately, we couldn't do that in Australia it was mostly domestic players, but I think going forward, piloting would be great in terms of the global perspective.
Right.
We actually have a lot of conversations with offshore financial institutions, because there is a lot of offshore financing coming into Australia into various industries as well, and they're really interested in the outputs of the pilots. You know, we've spoken to Southeast Asian investors in the gas industry in Australia. We've spoken to you know, investors in Europe who are financing certain parts of the ag sector. So I think there's also usefulness for the kind of offshore financing, and then also customers. So Australia is a, you know, significant exporter of commodities, and those markets are looking for more information about how Australia kind of manages environmental impacts and what organisations are doing, and we've certainly been asked a lot of questions about that.
Right. Thanks. I'm wondering if either of you could answer this around the data. The data question often comes up when we're engaging with people on TNFD. And there's a question in the chat just highlighting that the resources required to collect this data, and much of it is likely to come from the ag sector. I don't know if you can comment on this, Sarah, about how farmers might be incentivised to collect or provide this data.
Yeah, in terms of incentivizing, I'm probably, I could probably talk to you about what the government's trying to do to make sure that sort of burden on the farmers, landholders will be reduced. Essentially, as you know, the Environment Information Australia is being established, and so once legislated, EIA will have a statutory role to improve availability and access to quality, authoritative environmental data. So in time, and we can't say that it's going to be established like tomorrow or anything like that, but in time, they'll be able to establish a standardized, trusted supply chain of national environment data and information, and then you know, progressively linking these many environmental information sources available nationally, so that, you know, a place that publicly you can go to one spot and they should be able to get that sort of perspective of all the quality environmental information that are out there, and adopting leading edge technology to integrate and sort of extract information from vast, diverse national data sources, and, you know, working collaboratively with those that own the data, as well as people who will use the data as well going forward.
Yeah, I think that's.
One last thing is that just to let you know, our team is really working quite closely with the EIA in the department to sort of ensure that the consideration of the private sector is, including in when they're sort of putting this environmental data out there nationally. Thanks, Alex.
Yeah, I was completely agree, Sarah. In terms of one of the other kind of surprising things, Estelle, was just about how much data is publicly available in Australia. I think I kind of went into this thinking, it's either really out of date or there's not that much available. But when you scratch below the surface, there's actually a huge amount of publicly available data. The issue is more, as Sarah says, it's quite disparate. The federated model makes it complicated because, we have lots of different layers of regulation and therefore layers of data. And so I'm really excited about the EIA and the role that they're going to play in the future. I would say, though, that, and to kind of reference back to the Cairns Airport example, this to me is a really, really great space to think about innovative financial instruments and how that can incentivize this kind of corporate uplift of data collation and reporting. And, it's to this question from Catherine as well about, what's the carrot here? And I think finance is the carrot, which is why it's so awesome that we're here talking to Ria, because there are great opportunities to think about innovative sustainable finance instruments and how you can create meaningful change within corporates. And every farmer has a banker, and the role of the bankers in enabling the uplift and transition of Australian agriculture to meet these reporting standards in the future. I just don't think we can underestimate that, and it's why it's so exciting that we had so many of Australia's big banks involved in this pilot, and why we're hearing every day, just last week at the new nature commitments from Westpac and others coming out, like that can really help to transform significant parts of our economy.
That's great. Thank you. And Alex, I might just ask you a question that's come up in the chat about just highlighting the fact that a lot of this knowledge exists at levels far below the executive leadership team. So who were you engaging with when you undertook this piloting work?
Yeah, it's a great question. And I would say it was kind of a mixture between the kind of corporate sustainability functions and then the environmental management functions typically. And you are completely right, Murdo, that a lot of this information does exist within organisations, and sometimes it's actually a lack of awareness at the ELT level that the level of information is actually there and it can be repurposed. So that's why that kind of engagement with the ELT, the upskilling and the scoping conversations are happening with the ELT really early, so that they are across that. But as is the case with many, kind of new sustainability issues, and from climate to modern slavery to pick your topic, cross-functional engagement is absolutely crucial. This can't just be done by the environment team. It can't just be done by the corporate sustainability team. It can't just be done by the finance team. So thinking about how to set up cross-functional engagement in a meaningful way, I think is really critical to this. Yeah.
Great, thank you. And then just finally to you, Sarah, there's a question or a comment in the chat about the government's sustainable finance strategy. Can you just talk us through how this can kind of link into the government's sustainable finance strategy that was released, or the consultation was released about a week and a half ago? And then we might hear from Anthony after that, if you don't mind. Thanks.
Estelle, it's a good way to sort of introduce Anthony to speak now. And I think he'll give you a much more broader perspective from the government's perspective. So I'd like to now invite Anthony to speak, and he's our Head of Nature, Finance and Markets Division at the department. The division is responsible for the development of the nature repair market and supporting the private sector investments in nature, including the TNFD. The division is responsible for the delivering the Global Nature Positive Summit in October next year. So Anthony will provide that broader link between the TNFD and Treasury's sustainable finance strategy and the government's next steps in our priorities to support that nature-related reporting. Over to you, Anthony.
Thanks, Sarah, and thanks everyone. It's been listening in the background through all the different speakers. So it's great to see such a fulsome discussion and such a broad, I suppose, breadth of different expertise and what have you joining today. So great to see. So in terms of, so I'm heading up the Nature Finance and Markets division. So one of the core roles of the division is to establish the overarching frameworks that can allow for or to facilitate private sector investment into nature. I think it's accepted, certainly within Australia, but globally, the state of our environment is declining. There is increasing expectations on business to take account of nature. Internationally, with last year, the global biodiversity framework being agreed, recognising that there needs to be an uptick in terms of investment into nature, and recognising globally that there's a role to play for the private sector as part of that, that transition to a nature positive future. So the division, and through the government support, has been supporting the TNFD work over the past 2 years. And as Sarah's already touched on, collaborating a lot with businesses across Australia about how that TNFD framework could be applied in Australia. One of the core things I think about Australia to take into account in that, we are one of only 2 megadiverse developed countries in the world. So we have a lot of nature, we have a lot of land, but we also have a hell of a lot of expertise. And that all comes to, I suppose, also a lot of opportunities for Australia going forward. The only other developed megadiverse country in the world is the US. So 2 very big land masses with a lot of different ecosystems. So that's, I think it's an important context that often down here in Australia, we don't often realise how forward-leaning or how at the forefront we are on these issues. We're actually developing new approaches globally, whether it's things like accounting for nature or trialling different things like the Cairns Airport, which is a fantastic example. They're great examples demonstrating to the world about how to put investment approaches into nature into practice. So in terms of broadly across government, so what we're really trying to put in place is those overarching frameworks that can allow and facilitate for that investment to flow through in the context of the government's broader nature positive plan. So as part of that broader plan, there's, and as some of you would be aware, there's overarching work in terms of reforming our national environmental laws. There's the establishment of the Independent National Environmental Protection Agency, EPA. But importantly, from our perspective in terms of investment, establishment of the nature repair market, as Sarah's already touched on Environment Information in Australia, but importantly as part of that work as well in terms of environmental economic accounting work that is being ongoing work which the government is still committed to. So just on nature repair market, so that piece of legislation is currently before the Senate inquiry at the moment into that bill. One of the core things that that piece of legislation is trying to establish is this tradable ability for biodiversity outcomes on land to be traded and sold, so landholders can sell those outcomes to the private sector. But importantly, with 3 core aspects to it. One being integrity, in that if we don't have integrity into that market, that environmental market, then that's going to impact its future going forward. The importance of it being informed by science. So unless those activities that are being undertaken are achieving nature and environmental outcomes, then it won't give the business confidence that those outcomes are being achieved. And then thirdly, and probably most importantly, transparency. So unless there's open and transparent systems that allows, whether it be landholders, the general community or business, to see how these outcomes are being achieved and how those investments are flowing through to outcomes in terms of actions on the ground and biodiversity outcomes on the ground, that will be, I suppose, impact that potential of that market going forward. So having those legal systems in place is what that bill is trying to put in place. Importantly, things like a national registry system that'll allow the tracking of those outcomes and allow business to have confidence that those outcomes are being achieved. So that bill is currently before the Senate. Before I get onto the sustainable finance strategy, I also just wanted to touch on the environmental economic accounting work, which is being led out of the work in Environment Information Australia. So this has been ongoing work over a number of years now to establish the underlying national data sets for environmental information in an economic sense. So consistent with the UNC, which I think someone's touched on this morning, overarching consistent land information across the country. So what is the land use? Where is the different environmental biodiversity components across that landscape? But what the financial sector always tells us, they want national systems. They don't want to end up with different systems across state borders or within different regions. So that environmental economic accounting work that's being undertaken is a lot of that underlying data sets to facilitate these investment frameworks going forward. At the end of last year, Australia and the US signed a collaboration agreement. So we've been working closely with the US around how to apply and embed nature into environmental economic accounting. It's quite a complex thing to work through, but we're kicking above our weight in that space. So I encourage everyone to have a look at some of the information that's being released through that mechanism, and it's publicly available for all businesses to utilise. In terms of the sustainable finance strategy, so yes, the Treasurer released, I was going to say last week, but it was 2 weeks ago now, the consultation paper on the draft finance strategy, sustainable finance strategy. So that's out for consultation at the moment. And it will certainly signals the government's intention or ambition to be a global leader in sustainable finance. It certainly recognises climate change and climate investment as an area of focus, but also recognises that nature is something that is coming down the pipeline, and trying to build those kind of systems that allow for broader nature investment into the future. So I encourage everyone to have a look at that. And Estelle, we can probably flick through the links and make sure everyone online can see, or if they haven't already. Also, I think, I suppose what's happening globally, I think there's been a bit of commentary around, is this a carrot or a stick approach in terms of the growing, I suppose, interest in investment. I think it was last week or the week before, that legal opinion in Australia that came out that for directors of boards should be thinking about nature-related risks. So when I think someone was asking questions of EY about their engagement with different organisations as part of those case studies and whether they were being considered by boards and executive or further down the pipeline, these issues around nature are starting to be considered in boardrooms. It's changing quite rapidly. It does require an uptick in knowledge and understanding, and that's part of the job of government to provide some of that support. But is going to require a lot of, I suppose, engagement across different sectors and stakeholders which haven't been involved in some of these decision-making previously. I suppose recognising that a rapid increase in interest and things are changing globally, and global markets are changing in that they're increasingly wanting businesses to reflect how they're managing nature. The government's hosting the Global Nature Positive Summit next October. So that's bringing together governments, the private sector, environmental groups to start working through and trying to put into practice some of these global ambitions, and how do you actually apply that in terms of finance and investment. 3 broad themes that Summit is focusing on. It's similar to this kind of discussion today, very much about transparency and reporting, but also sessions around what is investment in nature and how do you build that supply chain of investment-ready projects. We often hear from the investment sector, they just want the investment-ready project, but our conservation groups don't know what investment-ready projects are. So there's going to be a need to sort of get that uptick in conservation groups and the investment sector to bring those 2 players together. So that'll be in October next year. So I think that's probably all I wanted to touch on today, but it's fair to say there's lots happening in this space. Keep in touch with Sarah and the team, and the great work that Rhea has been doing to bring together stakeholders to progress this work. But globally, there's lots of interest in what we're doing in Australia, whether that be our environmental economic accounting work, Environment Information Australia, the nature repair market, our work on TNFD, trialling it in different practices, our work with the agricultural sector in terms of sharing information, and then more importantly, and our work with First Nations people, the great knowledge that they have in terms of managing land and the opportunities going forward this may provide to them. So I'll pause there, Estelle, but happy to take any questions, or I know we've gone over time.
We haven't indeed. We're going to have to leave it there, Anthony, but it was great to hear from such a senior official and division head about the Australian government's commitment to all of this, the Nature Positive Summit next year, and also fantastic to see nature as such a central tenet of that sustainable finance strategy that was released. Well, that brings to a conclusion the fourth of our workshops that we've been running with DQ. Thank you so much to our speakers today. Thanks to Guy for clearly and so accessibly explaining the metrics of TNFD to us. Thanks to Rada, Liam and Libby for helping us to understand natural capital accounting and nature measurement and the resources available there. Thanks to Gareth for your insights from the Indigenous Desert Alliance on caring for country. And to Lucy, Ashlyn and Drew, of course, for really bringing to life your experiences with the groundbreaking, I would say, Cairns Airport project and incorporating nature restoration as well as First Nations engagement into financing decisions. To Alex and Sarah, thanks for taking us through the government-supported value chain TNFD piloting work and the useful findings there about navigating TNFD reporting. And Anthony, of course, thanks for reaffirming the Australian government's commitment to TNFD and what's next. Look, just very quickly to let you know that the TNFD is now looking for early adopters of TNFD, and they will be announced in the World Economic Forum in January in 2024. So please consider your organisation register your intention with TNFD to be an early adopter by the 10th of January, and we'll send through the links there. Thank you so much to DQ for your ongoing support, and we're looking forward to continuing as consultation group convener for TNFD to work with all of you to drive uptake of TNFD in Australia and Aotearoa. Now, my marketing team would not forgive me if I didn't promote our conference. We will be having a number of sessions on nature, as well as related topics like First Nations engagement, free, prior and informed consent for First Nations people, and in general talking about sustainability disclosures there. So it was a great pleasure to host this series of webinars, and we look forward to working with you all in the future. I think we do need to come up with a disclaimer slide. If you don't mind hanging on, but it's been great. Thank you everybody for your engagement, and we will see you soon.